Hi, Josh Barker with RE/MAX Town & Country Real Estate, and this month we're going to be doing our mid-year review for the year 2018. So like we still like to start off with each month, I'm going to go ahead and put a slide in here. And what this slide represents is a sales report for the Shasta County Multiple Listing Service for the month of June. So we're going to go ahead and circle for you in red. There was 329 properties that sold last month and closed escrow here in Shasta County. Now that's down by 1% compared to 1 year ago in the same month of June. It's just an indication that our sales volume is beginning to level off. Now if I put a slide right over the top of that, this is our pending home slide. This is how many homes went into escrow last month in the month of June. And you can see there was 328 properties that went under contract. And if you look to a year ago, there was 325. Now what that pending number tells me is that in the month of July, we are likely going to have fewer homes close escrow than we did in the month of June. And so, as you could imagine, some of the media outlets are going to talk about this in the first few weeks of August about sales being down in the month of July. Don't be shocked when you hear it. It's mainly because what we're seeing now is our home prices are beginning to slow down. We're starting to see our sales volume begin to level off. And so pending sales are going to level off as well, and it could translate into fewer transactions going late into the summer. The next thing I wanted to discuss just briefly is just home inventory overall. The next slide I'm going to put up for you, and I'll circle this for you as well in red. There was 1,142 properties that are currently on the market here in Shasta County. A year ago it was 1,046. So our inventories are up by over 9% compared to last year at this time. Now that is having an impact on the market. Now for example, this slide I'm going to put in red right over the top. You can start to see that average days on market is beginning to increase. In fact, in May you could see a big jump in the average days it takes for a property to get sold. What's happening is that you can see that home prices, home sellers going into the spring of this year attempted to push prices up at an even greater rate than they did the year before. What's happening though is that you can see from this slide, you can see how they pushed home prices up, but watch this. I'm going to put a slide right over the top. This shows you actually what the sold to list value ratio is. It means that there's a lot of homes that are selling for below asking price now. You can see that where it's going down. And that's because what's happening is home owners are pushing prices up. The homes are sitting on the market for a period of time and not selling. And then when they do get offers, they're negotiating down off those prices if they've been on the market for a while. So that's kind of giving you an idea of what's happening in the market at this current point. The next thing to talk about is just the rate of appreciation. I'm going to put a slide in real fast for you. And this slide actually is the year-over-year price changes. Now this slide is tracking back all the way to 2012. And you can kind of see there's that big bubble where it shows how much home values have increased, right? Well, that's the rate of appreciation is what that bubble represents. And going into 2014, you can see how that rate of appreciation is diving down. What it means is that instead of things going up at maybe 10 or 11% a year, now it's dropping down into the modest levels of 5 or 6% currently. And that's what you're seeing there on that slide is that you have this major correction back down to a rate of appreciation of between 5 and 6%. So let's go ahead and talk about appreciation for just a minute. This next slide I'm going to put in, this is from Zillow. What this slide represents is it shows us kind of the market data and what they project for the next year. And I'm going to go ahead and circle this for you in red. In the Redding metro area, there is an anticipation of just over 5% appreciation in the next 12 months. Now, I personally suspect we've already received most of that already for this year, because I'm beginning to see, like we talked about on the previous slides, we're beginning to see days on market increase. We're beginning to see price reductions in the market. So if that 5% were to continue, I'd be surprised. I think we're probably already going to be leveling off for the year at this point. Now to carry that point a little further, this slide over the top, this represents home appreciation expectation for 2018. You can see it's pegged at 5.8%. That's not surprising at all. Look what it's saying for next year. They're expecting in 2019 that appreciation will slow down to about 4%. And then look again at 2020, and it's showing it dropping into the 3% range. So what we're beginning to see is home prices as a whole begin to level off. Now I have colleagues all across the country, and with the exception of a very few select markets, I'm hearing this in all markets that home prices are beginning to level off. So this is not just common for the Reading area alone. It's actually something that we're seeing across the rest of the country at the same time. Now, because of this, because we're seeing the rate of appreciation slowing down, we're beginning to see home builders get a little bit more conservative with their decisions as well. I'm going to put a slide in here. And what this is the City of Reading Development Service Department. This is their building statistics for the year. And I'm going to show you the year 2018. I'll circle this for you in red. There was 50 permits that were pulled year to date inside of 2018. Now, if we go back to 1 year ago, there were 60 permits that were pulled up to that point year to date. So we're down by 10 permits already. Here's the thing, the 10 doesn't sound like a lot, I get it. But if you think about it, it didn't grow. Builders are not actually pulling more permits than last year, they're pulling fewer. And that's an indication that people are a little bit more bearish when it comes to whether or not the housing market is going to appreciate enough where these home builders are going to be able to realize the profits they need in order to continue to sustain building. So this is something to be thinking about. The next thing to go over is just mortgage rates here in the county and of course throughout the rest of the US. You can see here in this slide I'll put in for you, this tracks all the way back to 2015. Rates for the most part, all the way through about Q4 2016, were maintaining below 4%. Then going into 17, they kind of ran in that low 4% range. And now in 2018, we've watched it run into the mid-high 4% range. And you can see there in the blue, and I'll circle for this, circle that in the slide for you. In that lighter color of blue, that represents where they think it's going. Rates are expected to be at or above 5% by next year. And this is going to have an impact on our local market because most people in Shasta County purchase homes with financing. And so as rates go up, it has an impact on what they can qualify for. For example, if a buyer is qualified to purchase a home at $300,000 when the rate was at 4%, that same buyer, when the rate goes to 5%, is only qualified for $270,000. So that is the impact on the housing market as interest rates increase. The next thing to talk about, and this is the final piece, is just what's happening with the rental market. If you look around at rentals here in Shasta County, the rental market's really tight. For those of you that are shopping for a place to rent, I don't have to tell you, it's not real easy. There's not an abundance of rentals to choose from. And if you have pets, watch out because it's even more challenging because naturally some property owners don't want to allow for pets. But here's the slide I want you to take a look at. This is the slide that represents how much rents have increased over the last 15 years. And if you look at this slide, you can see how the trajectory is going up, and it's very consistent. What that means is that as rents increase, if you don't own a home, that means that your cost of living is certainly going to be going up as rents increase. And for those of you that do own a home, the good news is that you've already secured a fixed living expense for an extended period of time. Now, this is not just a secret, okay? Wall Street is waking up to the fact that the housing market is a safe place for them to invest. In fact, with this slide that I'm going to present to you, what this slide does is it shares with you America's choice for the best long-term investments. Years ago, the stock market used to be what most people would consider to be the place to safely invest money for the long haul. Well, that's shifting. Right now, real estate is viewed as the #1 asset class for people to be investing into for the long term and to have a secure, safe investment. In fact, hedge fund companies now are buying tens of thousands of properties, and they're actually managing them inside of their hedge fund portfolios. They're getting into the real estate market, owning homes and renting these homes out. And the reason why? Really simple. It's a safe place for them to invest their money. So if this Wall Street's looking at it thinking it's a safe investment, certainly us on Main Street should be looking at it closely too. So in any case, if you have any questions at all about the real estate market here in Shasta County, we're always here to help. Thank you again for your time today and look forward to talking to you soon. Take care.